Welcome to Season 2 of Build and Grow, a series dedicated to helping businesses go beyond financial management to achieve financial growth, resilience, and innovation. As businesses continue to revive and pivot to new models in these times, YourStory is proud to partner with HSBC for another season of inspiring conversations, insights, and observations from some of the newest trendsetters in business and stalwarts of the ecosystem. Tune in to power your next phase of growth and business continuity.
Hello everyone, my name is Madan Mohan Rao. On behalf of all of us at YourStory, it is my pleasure to invite Shivani Poddar, the co-founder of clothing brands FabAlley and India, for this episode of HSBC Build and Grow Money Matters. Shivani started her career with Hindustan Unilever as a finance manager and then moved on to Avendus Capital. She found her true calling with fashion in 2012. She and co-founder Tanvi Malik started their fashion house High Street Essentials. Their first brand was FabAlley that focused on women's fashion. She then launched in 2016 India, an ethnic fusion brand. In October 2019, they extended the brand portfolio by launching India Jewelry, a line of work to wedding fashion jewelry for the modern Indian woman. The company sells its products on websites, horizontal online marketplaces, large format chains such as Lifestyle and Central, as well as 30 exclusive brands across the country. Welcome aboard, Shivani. Our first question for you would be sort of looking back at 2020. This has been a year of the pandemic. It's been a roller coaster for businesses. Some companies have been hit very hard. Some have got a digital lift, so to speak. How has this whole year been for you at FabAlley and India as brands and as fashion industry players in general? Shivani?
Yeah. So Madan, I always, last few months, I've been thinking to myself that it took us 8 years to get to where we were at, and it took us less than 5 days to go back to zero and go back to where we started. So I think it's been an absolutely crazy year, as I put it. It's been a year where we had to build back from scratch. It was a year where we didn't know what's going to happen. A lot of uncertainty in the early months with respect to the business. We also have an offline presence. Will the customers come back? Will the stores do well? What kind of safety measures do we need to incorporate? So lots of uncertainty, lots of challenges. But as I look back, I also think this was the year when we probably, in my 9 years of 8.5 years of running this company now, when I learned the most. Just on improvement. So we really across teams use this year to say, how can we build better? How do we set the foundation for how the company will look like 5 years from now? Because when we, running all the time for these 8 years, there's no time for all of these things. You're always, you're looking at growth, you're looking at, you're growing at 80% every year. So that's what we were used to. And then, early this year, we said, okay, can we just look at surviving this year? Can we look at laying down a stronger foundation and taking it from there? So that's how I look back at 2020. And from a fashion industry point of view, I mean, it was an extremely slow year. Fashion industry was facing challenges in 2019 as well. So this year, once the pandemic started, it absolutely went to zero. And again, as I was saying, we didn't know how it's going to kind of, will customers come back? What kind of apparel will they buy? Of course, occasions, parties, etc. will not happen this year. So what do we do otherwise? So I think lots of uncertainty in the industry as well. But I'm really happy to tell you that I think across the board, as I see brands, I see there was so much flexibility and so many people changed their offering to actually, I mean, there are brands, we started doing masks. We were doing so many different things that, we could have never imagined that we'll get into. So I think everybody across the board learned a lot, and this year really gave them the strength, and everybody had the resilience to really kind of bounce back. So that's what I would take back.
Thanks, Shivani. Great to hear how you've bounced back. Maybe you can share with us some of the innovations you did to bounce back. We have seen in the industry a number of innovative strategies such as antiviral wear, home apparel lines, shopping on wheels, and many such initiatives. What are some of the innovative approaches that you followed up under your brands for high street essentials?
Yeah. So, Madan, I think, the day the lockdown started, which is, mid-March in Delhi, and we based out of NCR. And, that's when we started thinking that what do? We knew that, apparel is going to be slow for the next, at that time, we thought it's going to be 3 to 4 months. Nobody had thought it's going to be like 9 months. So we thought it's going to be a shorter time frame. So we really bounced back early and said that, all right, because masks are going to be pretty big. There was also an export market at the time till the government had blocked that. So we said, can we get into masks quickly? It was an essential which was permitted to be both manufactured and retailed at the time. So we started doing that. So that was our first place. So we got into masks in a big way. We used our existing fabrics. We used our existing setup to do that. Then the next thing that we did was we started our at-home collection, which is, our loungewear collection, which was, we realized people are not going to office. Comfort wear is something that they're going to be looking at. So we quickly, again, the minute the lockdown opened and we could start e-commerce at least, in May end, we launched our at-home loungewear collection in June. And that's something that actually started contributing to almost 25-30% of the business very early on. So that was the other thing that did very well and continues to do very well for us till this day. And from an offline point of view, we were again amongst the first ones to launch because we knew customers are not going to come to the stores. We had a bunch of inventory lying in the stores. So we said, can we go to the customers instead? So we launched almost an app kind of a product, which had a link which we sent to all our customers. It actually had products from across stores. And on the link itself, customers could pick the products they like. They could add it to their bags, and we would actually, from the closest possible store, our store manager would call the customer and take it to their homes. The store team would wait outside. The customers would try. They would keep what they like. They had an option to pay by card right there on that link. They would keep what they liked and return the rest. So again, this was something that contributed very well in the initial 2 months or so, where the footfalls across stores was really low. We also started doing a bunch of exhibitions in societies where we saw customers were quite comfortable in parts, like, so if there are 2 or 3 people walking in open areas, we did a lot of exhibitions in August for Rakhi, and then September, October. So a lot of exhibitions again where people could come to us as opposed to going to a mall to buy. So, like I was saying, I think this year was really about thinking out of the box and saying that we've got to sell. That's what we do. We've got to get the business back on track. So everything that was required, both from a product and a sales point of view, we did that.
That's a very impressive range of offerings, Shivani. But tell us a little bit about the consumer angle. There have been a lot of salary cuts people have been suffering from. There are job losses. There's been an overall economic downturn. But still, online fashion retailers seem to have some kind of a comeback. How have you guys fared at FabAlley and India?
Absolutely, Madan. So for us, we started as an online-only brand. So we were digital first for the first 6 years of our journey. So online first is in our DNA, and I think this year we really benefited from that because we again realized early on that offline is going to be very slow in 2020 and most likely a part of 2021. So we really double down on our online offering, both with respect to digital marketing, with respect to building on social media, with respect to our partnerships with platforms like Myntra and Flipkart. So we really kind of focused more on that and ensured that that's a part that we are completely kind of ready for. From a consumer behavior point of view, again, as a consumer myself, I feel that it's not that today you want to be like I'm going to go shopping for apparel, because apparel is generally not something that you need. It's it's a lifestyle kind of item which you can wait for 6 months or 8 months. But because of the online offering, there's so much pent up demand because people are sitting at home. They they want to kind of try new things, experiment with new things. So we're seeing a lot more online shopping happening now. So where we had really predicted the market to reach maybe 2 years from now, it's already there today. And that's something that we're really tapping into now.
That's very impressive to hear again, Shivani, how COVID has actually accelerated a lot of these online behaviors. What are some other trends around, say, festivals? We've had so many festivals, Diwali, Dasara, Christmas, New Year's, and so on. How are these festivals affecting online sales for you?
Yeah. So, I mean, in India, a lot of shopping, maybe about 45% of the shopping is around festivals. So, and especially in the third quarter of the financial year, which is, from October to December. So even this year, starting from typically Rakhi, which is, which is in August, and then you kind of move to Durga Puja, Dussehra, Diwali for the next 3 to 4 months, and typically the festive season ending with Christmas and New Year shopping. So these 3 to 4 months are extremely strong. So this year, our the online business grew much more than the offline business. So online, whether it was on our website or it was across partners, The response around festivals was fantastic. We also have a very large international business where NRIs shop, from all across the world on our website for our ethnic wear brand India. And again, that was something we saw. I mean, even though there are restrictions across the world, there are different COVID situations in different parts of the world. We saw that come back very well. So that was almost as good as last year for us. So our international business bounced back. Our domestic business, again, around festivals grew by almost 50% on our website, where we saw a lot of people still dress up. They still, we did campaigns around, we did a campaign which said Ghar Wali Diwali, where we said it doesn't matter if you're not going out, can we still dress up for ourselves? Can we, can we spend time with our family? And for those things, people were shopping. And it was really heartwarming to see that, even in this time when you're typically not going out, you're not partying, you're not doing your Diwali parties and cards parties and all of that, people were still kind of buying, they were dressing up, they were taking pictures of them sitting with their families at homes. And that's actually what we really pushed for this festive season. So I think all in all, the festive season was very good for us. I also heard that even for other fashion retailers, starting from September, the season went off quite well. So we're really hoping that this trend continues now.
Those are very encouraging trends, Shivani. In fact, heartwarming, more than encouraging, as you mentioned so well. My next question for you would be: can you drill down a bit more into those online trends that you mentioned? Earlier, you said something like people are experimenting more with new kinds of styles, etc. What are some other trends you're noticing in the way people shop online these days?
Yeah. So I think there are 2 or 3 key things that we've been seeing. One is, what are people buying? So within apparel, there is a massive shift towards comfort wear and comfort and lounge wear. So think of tracksuits. Think of athleisure. People have taken to sports much more than what they were, because everybody has more time today. So when you're working from home, you can step out at 5:30 and go for a jog and come back. And so we're seeing that a lot more shopping happening around sportswear, which was something that was much slower till last year, especially in the women's category. So that's really accelerated. We've also seen a lot of shopping happening around skincare, around beauty. These are not segments that we're into currently, but this is something that's really taken off. And again, that's an indicator to say that you don't kind of put on makeup only when you're going out, or you don't want to take care of your skin when you're out. So it's also something that women are doing for themselves. And as we kind of went more and more, as the pandemic increased in September, October, numbers started increasing even more, as people started going out. It was then that we started seeing shopping becoming like 2x 3x of what it was earlier. So I think from that point of view, so one was that lots of new categories came up this year. People spent a lot more on home. So again, till last year, I think you're out 12 hours a day. Typically, young working couples, nobody has time to really do up their homes. But this year, when you're at home, then there's so much happening from a home point of view. So some new categories became very large this year. Within apparel, there were a lot of new things that came up, which were not which weren't large enough categories last year. I mean, even things like sleepwear, lingerie. These were some categories that really picked up, across online platforms. So this is a difference that we saw. One interesting thing that we also saw was that the return rate reduced during this period. So, one could have expected that, people, because they're not stepping out, they're shopping a lot more online. So the thought is that, let me get 15 products, keep what I like and return the rest typically. But the return rate reduced. And so, it almost reduced by 20-25%. So that actually went on to show that people were, they were actually, one, buying what they liked, and two, they were also probably because you want to limit your exposure. So you don't want to, unnecessarily meet people to return to kind of, do all of that. So that was an interesting trend. And finally, the prepaid option, which was, typically India has been a cash economy for a long time. We were seeing prepaid become a larger part, but this year, prepaid's been like, it's been almost contribute to 55-60% of the overall business, which was again a big plus sign, because, when you're placing a prepaid order, you're much more sure of what you want to order. And you're also, you kind of limit exposure for both you and the person delivering it. So that was again something that we saw that we saw a big shift in that trend as well.
Thanks, Shivani. I think that's a very good takeaway right there for our audience, which is look at the data, no matter what assumptions you may have, look at the data to tell you what's really happening. We also mentioned earlier, people are going out a bit more now and so on. So what are you doing with some of your retail outlets now? You have 10 new India stores this year. You launched,
Yeah.
I believe, 5 FabAlley stores earlier. Are you planning to put a hold on them? Are you going to scale up, scale down? What are your plans with your offline stores?
Yeah. So, I mean, Madan, for us, I mean, we're in this for the long term, and every time, all these months, I would tell everybody, our entire team, that businesses are built over 20, 30 years, and not, not for these 8 months or for 1 year. So, I think our thought is not short term. We are not reducing our offline presence, or putting that on hold at all. In fact, we started a store in Mall of India in Noida, about 3 weeks back. We're starting a store in Kolkata early Jan. So this is not, so we're not putting it on hold. We are not as aggressive as we were. Only because we want things to start kind of getting back to normal from a footfall point of view, to start investing. But we are still, we're still expanding. We are, for our stores, we've got a lot of plans. So things like, we're doing store, we're doing appointments at stores where people can actually book in advance and come, and then we kind of, and these are in off time, off time periods. So they can come in the store. We kind of block the entry, and then we only service the customer that's in the store. We're doing things like, we're sending catalogs to our customers. They're actually just buying from that now, as opposed to coming to the store and a store team is delivering it, or we're sending it through e-commerce, from our warehouse. And we're also, doing a lot of things around omni, which is to say that, our warehouse, our inventory needs to be optimized. So customers sitting, even if I'm close to a certain pin code in Delhi, can I still get that item from some other store in anywhere in the country within hours? So a lot of innovation around that piece, which is what we're doing. Of course, all the safety sanitization measures in our store are extremely strict. So, when customers walk in, they actually do feel safe, from masks to gloves to, how our staff kind of greets them. So all of those things are in place. And the thought was that even if, 50% of our customers are coming today, can we double down on the conversions? Because people who are coming today are really, they're people who want to buy. Not many people are stepping out to window shop today. So I think that was what the strategy has been in the last 4 months, since we started seeing an increase in footfalls. And that's what we'll plan to do. But definitely offline is something that we believe in, from a long-term point of view. We have lots of partners like, Lifestyle, Shopper Stop, Central, and even with them, we are extremely aggressive. We are opening new doors with them across the board. So yeah, so we're quite aggressive on that. It's not something that we'll put on hold at all.
Thanks, Shivani. That's great to hear how you are learning and innovating and expanding all at the same time. Maybe now you can shift a little bit to tell us a bit some of the marketing initiatives you're doing. You've talked a lot about your operations and presence and so on. How is marketing changing? How is digital marketing working for you? What are you doing with offline marketing? What's
Yeah.
happening with marketing?
So I'll start with content. So when the lockdown started, we did a 360-degree shift in terms of content, which is, how we communicate with the customer, whether it's through our social media, through our emailers, through push notifications, any of those things. So we actually said that, today, when I'm sitting in, I was in March, April, May, those months, customers are not looking to buy, right? Or, I mean, even if they can place prepaid orders, or they can place kind of orders in advance, they're not looking to buy. They're really looking to kind of consume. Read more, know more, and that's because, people had a lot more time, at the time. So we actually shifted our entire strategy to doing videos, to actually, and it was really, so if you go through our social media, we actually made those videos by ourselves, because we couldn't get models and we couldn't get people at the time. So our teams would really be, we were all at our places, and we would do a self shoot and actually make videos. We would put out content. So for 3 months, we actually ran social media by using content which was generated within our by our teams, and that was, fantastic to see. And this was content around, fashion at home, tips to kind of dress up in a certain way, or just kind of, a lot of fun videos around the pandemic, to kind of reduce the stress levels, what books to read, what videos to watch. So a lot of content at that time. So we kept at it. We kept communicating with the customer, because we wanted to ensure that we're top of mind even in those months. And that's something, and that's the period when we saw our maximum increase in engagement and in our following. So that's how we changed it. So that was our first step, to say that, let's communicate better and let's communicate different, because that's what the consumers are looking for today. And then we, of course, on the digital marketing side, we really increased our spends, increased our budgets across the board. We knew online today contributes to almost 70% of our business for this year. So we really partnered with new agencies, with things like banks, with multiple partners across the board, to increase that part. We also, launched a lot of new channels. So we said that, historically we work with 2, 3 partners. Can we really, work with more partners across the board? And in that, we launched in UAE on a website called Namshi, which is the largest fashion retailer in the Middle East. So we worked with them. We launched in the middle of the pandemic with them, and both brands, FabAlley in India, were hugely successful. Are hugely successful on that platform. So taking that, we said that, can we look at international partnerships in a larger way? And that's how we, now looking to launch in the Southeast and in the US and, multiple other markets. So that was the other take back that we did on the marketing side. And we also on offline again, we this time, we couldn't run ATL, we couldn't take holdings, we didn't do any of those things. What we did was that we did a lot of one-on-one personalized marketing communication with the customer. So at stores, our store managers actually, for our top 1,500 to 2,000 customers for every store, on a weekly basis, they would call them, they would send them, the collections that we've launched. We did a lot of video calls where we actually went through. So we had videos of the store, and every week we would make a new video of what the store looks like, what are some of the new launches that we're doing, and those would be sent to these top customers so that they could see and they could know what's happening. So I think from, just the thought this time was that, marketing is not what it used to be. So we really had to, so we really thought of things which we've never done and said that, this year marketing is going to be about personalization. It's going to be about me, whether it's online through the communication that you're giving to me, whether it's in the form of mailers or what I see on your page, or it's in the form of stores telling me, asking me to come back or shop. It's going to be one-on-one and it's going to be personalized. So that's how we looked at the whole marketing piece for this year.
I think that's again very good insights for our audience. Personalization is the future of marketing. So, Shivani, can you tell us a little bit more about technology and data insights? How are you using technology to drill down into customer needs, aspirations, and so on? You just mentioned also your international approaches. Tell us a little bit more about digital and the smaller, the tier 2 and tier 3 cities in India.
So we've actually been very technology led from day one, because we were an online only company for the first 5-6 years of our journey. So we have a very strong tech team, and starting with how we design, which is the DNA, which is the core of our company. We use data on what's sold at drill down to many metrics in terms of whether it's a color or it's a neck or it's the length or it's the sleeve. We have maybe 15 such metrics to be able to actually catch what is it that the customer's liking about what we've made, and what is it that customers not liking about some of the products that we've made. And that data is really passed on to the design team while or when they start designing every new collection. So that's been one big takeaway, and all our designing in that way is extremely data driven. So that's what's, and that has major supply chain benefits in terms of lower inventories, less liquidations, less write-offs, all of those things. So that's how we start with data. Then moving to on our website, again, a lot of things around personalization is done, which is to say that, if you come in on our website, will you see different products at different points of time based on what you've kind of bought from us. We have a subscription feature called FabFix, which is, every month we put out a new box where people can actually select what they like. And based on, are you a classic, they take a quiz and then they select, we recommend a box based on that. Now, once the customer has bought that, we have data on what is their personality in terms of how they dress. And that data we can use to, fine tune our communication with respect to notifications, mailers, all of those things. So data on the online side is really the core of, what we do and how we market. And even like whether it's on Facebook, on how we show ads, what ads we show to whom, how many times a day, at what time of the day. So there are so many cuts that actually data gives bites for both on the design side, on the marketing side, and finally on the supply chain side, which is to say that what to make, how much to make, when to reorder, how much discount to give on that item. So all of these things for us these are all systems which we've designed in-house. We don't use third-party tools for this. It's all proprietary data. And this is, so we are, I'm very happy and proud about this, that we are extremely data driven and only hope to become more so in the future. And I also wanted to add in terms of shopping behavior, other question on the shopping behavior from tier 2, tier 3 cities. So, historically for us on the online side, tier 2 and beyond was almost about 35% of the business. So it was a smaller part, frankly, from a larger pie. But as we again moved towards the lockdown, we started seeing orders from these places jump up like 3x. And that, And that's because we start seeing people, but because a lot of smaller places, people do go to their neighborhood store to shop. They still go to large format stores, or say a Pantaloons or Reliance or some of these which are there in their areas. But when all of those were not happening, we saw these people take to online in ways that we had never seen before. So a lot more people came online, and for us that ratio started increasing. So there was a big shift towards towards focusing more on on tier 2 and beyond. We were also seeing a lot of these people were they were shopping across price points. So we didn't see that oh, is it the products that are on 60% off that that are going to these pin codes. But this was even on fresh prices at about 3,000 plus, were also people were buying it. So that was a big eye opener to say that today there is demand across the country. We are already present in a lot of tier 2 plus cities and towns through our large format stores. So that's also, so this is also something that we will look to increase through our EBO presence, through our online presence as we go along in 2021.
Very impressive trends again there, Shivani, about what's happening in tier 2 and tier 3 cities. Again, the data shows a lot of counterintuitive kind of trends. That's very good for our audience to know. For the next segment of the program, I'd like to focus a bit more on the finance. We've covered marketing, customer offerings, and so on. Now, we believe that you've raised 8 crores and then 20.7 crores in 2 different rounds in January and June. Where is this capital going to go? Can you share with us, if you can, maybe what's the breakup going to be of some of your expenditure in the future, Shivani?
Sure. Yeah. So, Madan, we've historically been a profitable company, and so from from except for, of course, this year, given given the revenue was minimal for the first few months. So a lot of the capital that we raise actually goes to towards growth. So things like adding more stores, putting in and trying with new categories, and so kind of betting on inventories for those. So a lot of this actually goes towards working capital, towards growth related measures, towards new categories and new brands. So that's what the money is for, essentially. We also invest. We are also planning to invest a lot more on the tech side to build stronger systems, stronger teams there. So that's again something where some of this money will be deployed. On the marketing side, we're anyway, like I was saying, we are break even on the profitable side. So that's somewhere where we don't invest, where we don't need to invest or burn money, as we call it. It's more to say that let's the money that we got was actually, we were extremely lucky to be able to raise in the midst of the pandemic, and that's money which we're using very carefully and frugally to really kind of, so that we have enough capital as we move towards growth in 2021.
That's a very good breakdown of categories there, Shivani, and also that whole mindset of responsibility. So, speaking of mindset, I would ask you now, what is your relationship with money like? Maybe at a personal, professional, even philosophical level. How do you build
Yeah.
money? How do you grow it? How do you manage your assets? What's your relationship with money? How does money
Yeah.
matter?
So, Madan, I want to start by saying I'm a Marwari. So, my relationship with money is that I'm extremely frugal, and I'm extremely, I value money a lot. So, from a business point of view, I have, we've always built this company with the bare minimum capital that we needed at any point of time. We wanted to ensure it's capital efficient. And typically you see a lot of what I call unnecessary spending in startups. When you've raised venture capital, because you have money in the bank, and as an entrepreneur, you're kind of tempted to spend it and do things which may or may not kind of yield great results. So I think we've never, both Tanvi and I have never kind of fallen into that trap. So we've, so for me, money is, I feel blessed that I've been able to raise that money. I feel, and I feel a lot of responsibility towards the people from whom we've raised that money. And hence, from a working point of view, every penny, and there are times when we argue with our teams to say that, can we not save 5,000 on this? And for a company of our size, a lot of people might say that why are founders getting into this? But for us, everything matters, and I think that's how we've built it, and that's how I will continue, hopefully, to build this. On a personal level, again, I've always felt that that both my husband and I have, we were professionals. We were living in Mumbai, and we were kind of supporting ourselves. And then when we came back, I put in all the money that I had into starting this business. So there was a lot at stake personally as well. And hence, even till date, I feel whatever we've managed to build and whatever I have today needs to be valued. It's not taken for granted, and the money, little money makes more money and then more money. And I think that's what I've always felt. So if you start with X, you can get to 10X only if you're very careful with how you manage that. And that's how I've kind of managed. My husband is a money manager. He's an investment officer. So thankfully, we've been kind of able to, on a personal level, we've been able to ensure that we save a lot. Our lifestyle is not, is extremely is basic. We're not extravagant, so we save a lot, and then and that's how we plan to grow it when we can.
Again, Shivani, those are very good tips for our audience on balancing risk along with responsibility. Now, you're dealing a lot with banks. So can you share with our audience, what's it like working with banks and lenders? What are some of your expectations from bankers and lenders, and how can they do a better job of dealing with entrepreneurs?
Yeah,
Any
yeah.
thoughts on banking and lending?
Absolutely. So for us, because we've been a venture backed startup, and also in the first few years while we were burning money, it was challenging to work with banks, frankly, from a working capital lending standpoint. Because they have a more traditional mindset with respect to the businesses they back, with the quantum, with the backing that you need, and all of those things. So there are two types of. I'd like to say two things. So one is that the ecosystem now has developed much more, and there are lenders where there are venture debt firms. There are lenders that actually today lend without collaterals to startups. And this could range from 20-30 lakhs from, say, a lending card or a capital float, or some of these to 50 to 80 crores from venture debt firms, say like a Trifecta and Altiria. So I think the range has become wide. And hence there is a lot more debt available today to startups to be able to scale up without diluting equity. So I think, which is a fantastic thing that's happened to the ecosystem. The banks, in my opinion, have been extremely slow. They've not this entire space for them still remains a complete no-go zone. In my own experience, I've hardly seen banks come forward with any large limits without collaterals, or backed by working capital or inventory or any of these things. So I would just like to say that I think a lot more can be done by banks. People are already doing it. There are so many institutes which have come up, which are lending to startups at higher interest rates. And I think banks have a long way to go. So if that's something that they really look into, or they actually have lending departments for not your traditional companies, but your early stage companies, because early stage companies work in a very different way with respect to growth rates, with respect to burns, etc. So that's something that the banks should kind of support and understand. So I would really say that that's the need of the hour, and for banks to really have these departments and start promoting startups as well, because it benefits the country on the whole. When your banking system is strong, and when today as a young entrepreneur, I can go to a bank and say that we're doing hundreds of crores in revenue today, but I still can't get a loan, because we don't have, I don't own any personal assets, so we don't have collaterals there. So if the banks are actually ready to do that, I mean, that's going to be a big boost for the startup ecosystem.
Again, Shivani, that's very good advice for the startups in the audience about how financing is improving, and very good tips also for the financing system on how to improve the overall outlook for the economy so that we can all rebound from this crisis and beyond. So my last question now, Shivani, is as we come to the end of this program, what's your advice for the aspiring entrepreneurs in your audience on how to embark on the startup journey? You yourself have given up a very lucrative corporate career to jump into the very uncertain world of entrepreneurship. So for maybe both early stage entrepreneurs in the early part of the career, or for mid-career entrepreneurs, what's your advice for those who want to get into the startup game, Shivani?
Yeah. So, Madan, I would just say, two things. One is that, don't be afraid to take a risk. I mean, that's what I tell everybody, because, I hear this so often that, oh, I had this idea of, I had the first idea of doing this, or, with people I know around. But many people don't actually take the first step because they're scared. They're scared that, okay, I'll lose my job, I'll lose my corporate career. What if I'm not able to come back? There are so many negativities around that. So I just feel that, when I quit, I was 25 years old. I was a banker. And, and I always felt that, I need to take this chance, because if it doesn't work, it's fine. I can still go back and become a banker again, and nothing's going to stop me. If it does work, it'll change my whole life. And I think that's the mindset that I would tell everybody, that all of us have great ideas, and I hear them all the time. It's just the fear of failure, or it's the lack of risk taking ability that stops most of us. So I would just say that would be my first point, that don't be scared. It's great to take risks, and some work and some don't, so be it, but that's life. And the other thing I would say, that entrepreneurship is a lot of hard work. I mean, when I was in investment bank, I used to work 15 hours a day, non-stop, every single day of my life. And I thought, what could be more challenging than this? I'm already doing it when I started. And when I look back, and I said, it's not about the hours. When you're an entrepreneur, it's your whole life. So you're living, breathing, just your work, and because you love it so much, you have so much passion for it. It's not something that you leave at all. And I think that's a change that people need to be ready for. Just the fact that you work 7 days a week, and whether it's 10 hours or 15 hours, or depending on what it is that you do, but it takes everything that you have. And I think the willingness to be able to do this is what you'll need to succeed.
Fantastic advice, Shivani. Thank you so much for an outstanding program. Three key takeaways, I think, for our audience from your session today are risk. Be willing to take risks, learn how to manage your risks, start small and then expand as you grow. Second would be responsibility. You are responsible to yourself, your family, your customers, your business partners, and so on. So be responsible with whatever money you raise. And last but not least, resilience. This is a long and tough journey. And I think from all the examples you've shared of how you survived and weathered the pandemic, resilience is a key message for our audience. Thank you so much, Shivani. I wish you all the best for 2021. And to our audience, on behalf of Your Story, thanks to all of you. Thank you.
Thank you once again for having me, Madan. This was a lovely session. Thank you so much.